So, what are the pros and cons of using leverage? And when people say leverage, what they're typically referring to is the process of using a mortgage. So, leverage is the act of using borrowed funds, usually in the form of a mortgage, to enhance your returns as a landlord. So what are the pros? What are some of the reasons that we would consider doing this? Well, most properties in the UK are very expensive to buy. The average property generally is about £250,000, and in London closer to 600,000. Most of us simply don't have that amount of money sat around in cash. Therefore, without the concept of leverage, it would be virtually impossible for us to buy. But it's an advantage in the sense of actually we can put down a lower deposit to acquire that property or the title deeds than we would need to if the concept of leverage or buying in cash was the only way that we could buy it. So, alongside a lower deposit, we also have the ability to buy more properties with the same amount of capital. If we had £300,000 in cash, for example, rather than buying just one property at £300,000 in cash, we could in theory spread that across 3, maybe even 4 properties, assuming we had a little bit extra for fees, charges as well. So leverage helps us to buy more properties, acquire more properties with the same amount of capital that we might otherwise only be able to use in cash. This, in some ways, enhances your returns. So, if we have rental yield and capital gain as the 2 main ways in which we generate income from a property, it is better, therefore, to have 4 properties and reap the rewards of the capital gain on all 4 properties rather than just 1. And naturally, if we're talking about percentage terms, which we really should be when working out how good our property investment has been, we will also have a better return on our invested capital on a property-by-property basis. By buying multiple properties, it also gives us the ability to diversify. So using a mortgage actually has secondary advantages, which is allowing us to buy more property. It allows us to buy property in different places or different types of property, which in turn diversifies our property portfolio. So, what are the cons of using leverage or a mortgage? Well, the first is, naturally, we have a repayment, which means lower cash flow. Of course, if you have a monthly repayment for a mortgage, which is both the principal and the interest on the loan, that will naturally eat into your profit. Whilst, of course, we have the advantages of being able to buy more, what it typically means is that the more that we leverage, which means the more that we borrow, the higher our repayment on a monthly basis is likely to be, which is going to dampen the profit that we make on a month-on-month basis. Second thing is, well, the more we leverage, the more fees will be involved in leveraging. Mortgage arrangement fees, you may need things like surveyors as well, again, which can have an impact on your affordability for a property in the early part of your investment. And finally, there is more risk associated. The more we borrow, naturally, the more risk we have. If an investment goes wrong, we go into negative equity, then there are risks that it could go very wrong. So those 3 are the typical cons of using mortgages. It's worth, whenever speaking about mortgages, that the best port of call for advice is your mortgage broker.